TradeTheMBI.com. This is John's reports for the 28th. And, we'll look at the chart here, and this is how you begin to see the difference between this, where you have MBI white trailing underneath the 10, no worries in the world, coming off the steep decline and the rapid rise. Well, we had a brief little dip. Still, there wasn't a lot of short activity. Well, now look at the difference of what's going to happen here. If you get a dip here with MBI white now well above 25, things have changed. So it's a big difference, Someone looking at it randomly would be like, not a major deal. And with the steel where it is, you've got a pretty good shot at a reset to the upside, but you can also end up with an extended period below the negative 13. So that would be, weakness personified. Now, in this particular case, do I consider that a grim sign? No, because at the end of the day, that steel reset, you're going to still have that turnaround pop up come from there. Now, is this your end of month closure that people are saying, hey, I've had a pretty decent month, I'm going to lock in my gains before, something strange happens on the world scene? Well, we see that early when it comes to our 50K kind of chart, and even lower than that. We knew that still this gap needs to be filled right there. Now, came pretty close in the pre-market. It's hard to see with the dark red there, but low got down to 75.05, and from the open there, 74.90. So, within 15 points, you got filling in that gap range. You certainly took out the bottom level of the lows from the original gap move. And that's not surprising. I mean, we're looking at a lot of strong MBI weight lead throughout most of the 50K, even though you still had magenta over that was causing you to have the little ride up. But as soon as magenta faded, you got the corresponding move there. So normal mean reversion, absolutely. And that's the thing, some people say, well, I might have been early, but I wasn't wrong. And it's like, well, yes, you were wrong because you were early, but that's a whole different story. At the end of the day, in a mean reverting market, you stick around long enough and you're going to get there. This is the whole Warren Buffett kind of strategy idea where it's like you buy and hold. Yeah, if you get enough inflation over enough time, the likelihood is that you're going to see massive appreciation, and it's not necessarily from equity growth, because he always talked about P&E, where he's now got $500 billion in cash, but missed out on so many opportunities because I don't see anywhere in their model where he accounts for currency devaluation in the PE ratio in that. And that's literally what you get. And you see it all the time. Everyone thinks their house appreciates in value. That can be true if there's a mass influx or you have some kind of special economic thing. But over time, the reality is at an equilibrium state, it's a representation of dollar devaluation. It's like in the 70s where homes were like 40,000 at the beginning of the before you had the oil crisis, and then all of a sudden homes were worth 3 times as much. Really? No. It was the fact that, the oil crisis had devalued and inflation had started its path, and that was the effect that you saw from it. And this is why you get these stabilization periods. And like we saw the massive home price increase during the COVID era period time, because yes, inflation, you had a massive devaluation, a lot of extra money flowing around. Now, your bigger concern is why they're terrified when it comes to this model when they see deflation. They don't know how to handle deflationary prices. And you're already starting to see that in condo markets throughout the country because that is the lower end of purchasing power. And therefore, as they're squeezed, it has a dramatic impact, because they just don't have the resources to accommodate that inflation devaluation. And so you get a reduction that pulls you back into the range of affordability within that scale. And this is where they begin to panic a little bit, because without an inflationary model in there, becomes difficult to maintain ridiculously low interest rates, blah, 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 because there's no incentive to save at that point, so that everyone just would consume. Ideally, that would drive demand up, but what you have is a demand collapse because that money is being put into non-effective uses. And so when you see these companies with these massive amounts of cash and stuff, that's just money that's doing nothing. You can argue that it's going into treasuries or whatever, which is going to be loaned out, not when the government is sucking up, massive amounts of that capital for ineffective economic use. And this is where you get into the reality of government as GDP is one of the worst possible expenditures for creating growth. It just and the math is clear. I'm not. It's not something speculative now. They've finally come to this understanding, realizing that government spending is very ineffective. What we're looking at was the Asian market collapse as the tensions from the Iran situation were escalating, softening a little bit, and that's going to be the rhetoric game. Played back and forth from the ES standpoint. So we look at it from our daily. All we've done is come back down to the lows. We haven't even tested part of the move. And you know, there's huge expanse between the highs and your 76%. Morgan actually lies down at 72. So a big range just within this peak envelope. And that, isn't a normal situation. Usually it's a lot narrower than that. But that's the state of things. From an NQ standpoint, you can see a little bit softer from the MBI white, but still doing the exact same thing, and also the same collapse here with the steel. So, and you're getting to the point where obviously at the beginning of next month, beginning of next week, you'll be in a new month and right before new fund money comes in. So will they be looking for a discount? Do they want to capture that? There's a portion that will always be buying because they have to, because they just have that much money that they don't have a choice, and they can only just buy. But then you have the others that have been able to liquidate, move it to cash, and think that they're going to get some kind of discounted deal. And this is where you get the bifurcation, those intra moves. From an oil standpoint, there's not a lot of excitement here until you get sub 70s. It's not even worth talking about because it's all insane from that viewpoint. And then the numbers keep coming out of Europe, and it just gets worse and worse from France, Germany, even Britain. But even though they're not in the EU, it's still roughly considered a part of the whole European setup, and it's just not particularly good. Because they're doing the exact opposite model. You've got more investment coming into the U.S., broadening, reduced regulation, and you have just the opposite of the EU. So you want to compare models, there you have a perfect example right there. More regulation, tighter controls, less freedom of capital move. And you see the effects from a GDP standpoint with the whole green construct versus what's taking place now in America, which it wasn't before, because during the Obama years, Biden years, you were strictly moving into that European socialist model, and obviously things suffered accordingly. And you're not going to get it fixed even with the 4 years of Trump before, or even the 4 years now. That ship has sailed to try and correct it and get back not only how far off course you are, but the amount of force it takes to get back there is crazy. So gold continuing to slide a little bit here within this because it's just not a whole lot of interest, and this is what the paper market can do. And they really would love to drive this much further down. I mean, obviously we can see it's been in a sell for a while since the bare 50% right there. We had MBI white lead, and no change from that is decayed since there. So we've never even seen a dip of the orange below green across this entire range through much of May. So it's just is where it is right now. And of course, Bitcoin up fun there. We can apply the correction, see what it does to it. It's not going to change anything. It's just when you have futures markets, sometimes you need to update that. But it's dipping below its 50% also from an MBI white lead. So that was clean from that little, what you would call them, violet candles. They were a signal of breakdown move. And usually when it comes down, you get that orange popping back above green, and that usually is the beginning of your cycle. Now, ideally, when you get the orange popping of green, if the orange is above the 7.5, this is a beautiful one to go back and check for those of you that are looking at it. You look at that orange moving back above green, 7.5, that's usually the beginning of a negative run. Just to let you know, that's a pretty easy one to see as it plays through. So that's the broad picture of things. And, of course, there are going to be the news events that'll drive things. And the quagmire is all you can call the Iran situation now, whether they call it negotiation, optimistic, whatever. You're in a stalemate, and either Trump thinks he's getting a deal or he's being played. Uh, those are your only two options. And if he doesn't get the deal he wants, is he going to be willing to take something that he doesn't want? And that's the end of it. So you have the stake of both countries' prides on the line, and that's a difficult spot to be because there's not a whole lot of compromise within that. So, people start doing the calculus, and then they start looking at the movements, and you can see if people start selling, they're in the know, and those people in the know who are getting out of situations say, hey, yeah, this could get a lot worse if things blow up from a military standpoint again. So that's the long and the short of it for now. Anything relevant, I'll put it on our team chat. Have a good one. Trade well.